strategy do you think that sets you apart from others?
Well, what we do is we strictly focus on convertible securities, whereas many of our peers will enhance returns with common stocks, foreign securities, straight bonds, but we stick to our knitting and basically just buy convertibles that offer balanced returns. So the majority of our portfolio is in securities that offer, say, 60 to 70% of the upside with only 30 to 40% of the downside. And then we utilize what we call our barbell approach, where we will add securities to the right of the barbell that are more equity sensitive and more common stock-like in nature, that offer upside return from their underlying equity and have higher risk, higher reward. And then on the left side of the barbell would be the busted convertibles. Those are more credit-like in nature. So they have higher than average yields to maturity and offer less equity sensitivity.
Give me an example of a couple of your holdings that you have and why you like them.
So one of our largest holdings is GILEAD Securities, which is one of the large biotech companies specializing in HIV. But right now they also have another leg of their stool, which is Hep C. And what we like about the company is that it is like a pharma company, but with higher growth. And when we buy the convertible, we own the security that's a 1 5/8 coupon, whereas the common doesn't have a dividend, and it matures in 2016. So if you're wrong at the end of the day, you get par back. But in the interim, because you have the underlying equity option that you're holding, you get to participate on the upside with the underlying equity and get paid for the story to turn.
You actually have a lot of healthcare and biotech holdings.
We do.
What is it about that space in general that you like?
What we like about it is, in terms of from a convertible point of view, is that you get paid to wait. A lot of these companies are growth companies that constantly need access to capital, and so they don't pay a dividend. But by buying it through a convertible, you get a dividend, and at the end of the day, these things take a time for these products to come to market and get FDA approval, and so you're getting paid to wait.
You also hold some convertible preferred of the big banks. Now,
yes.
Why not just own common stock?
Well, we bought these bank preferreds back after the financial debacle back in early '09, and they're strictly yield securities. So they have above average yields. Both Bank of America, Wells Fargo, Citigroup, we have been holding, and so we didn't know when the turn was going to happen. We knew the return with that they would turn eventually, but so we got paid to wait, and we are getting paid to wait even as they have turned. So that's why we like those.